Right, I think we have enough people in the audience, and most probably Trex is having some problem. We'll try to move ahead with things. So basically, yeah, nope. So, Trex, you are not audible. You can just rejoin by disconnecting, and just refresh your Discord channel. Until then, we have Zohib with us. Hey Zohib, what's up, man? Can
Yeah,
you hear me?
Nas, yeah. Am I audible too?
Yes, you are audible.
Oh, perfect.
Yeah.
How's
Uh,
everyone doing?
I'm
I
sure
guess
everyone
great.
is excited.
Is it working now?
Yes, it's working.
Let's go. All right. Sorry about that. Not sure what happened there. Okay, and can everyone see my screen?
Yes.
Yes, we can.
Perfect. Well, welcome everyone. The people still trickling in. Panda, if you want to do us a favor and highlight any questions and send them to like our chat, like our private chat on the side. That way we kind of have a list of questions that we can run through at the end. First and foremost, let's primarily go through a very quick, if you're brand new, what are these beasts? I know a lot of you have heard this before or have researched it on your own. But yeah, like we'll just go across all the tabs. Like first of all, you're gonna get 100% fee share from the liquidity provided from the mint proceeds of all the beasts. So that's kind of like the main benefit and where this whole idea initially seeded from. And then we decided to just keep building more and more things on top of it. So for like, as some people have noticed, that these NFTs have levels, 6 levels, and they'll kind of grow up according. You kind of see that progression here. You'll also be able to refer people to the platform and earn rebates, and this will only be accessible to NFT holders. In addition to that, these every rebate that you kind of earn also gives you our voltage points, which are kind of like our reward system, and those voltage points are used to level up NFTs. We'll go a little bit more into that later, since the exact mechanics of that haven't been revealed yet, and we might be revealing it here. And yeah, if we want to like a very very quick TLDR and just text based, here's one version of that. So feel free to read it. But in the meantime, let's open up some questions. Or maybe perhaps we should introduce Zoheb because he's I'm pretty sure he hasn't made a public facing presence in a minute now. Zoheb, how are you? You're CTO. How has life been in the past few days?
Um, Thanks for the introduction, Tregs. And yeah, days, nights. I don't know what the previous 72 or 96 hours have been. It's just been a thrilling experience. You've given an overview in the NFTs, and that's what we have come out with, and it's been a journey. It's a first in a lot of ways, which kind of excites us more. Very first to actually do a programmatic reveal of the NFT as well, which is updating the authority, and kind of having all of the embedded stages that we all see here in the backend. FOMO Frankie and other kind of sites have done a great job at kind of displaying that thing. So it's been an experience. A lot of records broken, persistent storage, decentralization in every way possible. So yeah, that's been an amazing amazing few days, and yeah, couldn't be more excited to also go live with the platform in the coming days as we are. This kind of sets the tone, right? We've seen a lot of things. We've been in the ecosystem for so long, and finally have all of these things put out and deliver the best experience that we've always wanted to. Just fills us with so much pride and joy. And yeah, like really appreciate the support that we've received over the over the week and yeah, all along. NFT communities are just the best place to bootstrap a lot of support and a lot of excitement, which is lacking in DeFi. Right, DeFi is all about numbers and boring stuff. So yeah, amazing start with all of you guys. Really appreciate it.
Yeah, that's the man behind the magic. He's our we've been liaisoning for him, depending on all the questions of like why is the reveal taking long, why is when reveal, all these kind of questions. We are going to Zoheb and being like, what's going on here? Uh, but yeah, I think everyone's kind of excited about the beasts. Everyone's excited about the art. It's kind of great to see them on the marketplace, just this full page. So it's yeah, we're just really happy to have that stage of things out. But we're not slowing down. We are primarily a trading protocol, and the NFTs were merely a way to bootstrap the community, as Zoheb said. Give people something to be excited about too, like you know have something to connect to as far with your NFTs, and a way to gate access to certain chats, have ways to like ask the team things, all the wonderful things that come with an NFT and like its ability to build a wonderful community. So yeah,
That's true. That's
let's
true. And so far, interesting thing is like like people are just surprised by the utility slash revenue factor, and on that, the art as well on the marketplace looks so beautiful. It just look vibrant, to be honest, and like stands out a little bit from whatever we have on the marketplaces like Tensor and Magic Eden. The beasts actually stand out. So
it's quite nice. All right, let's get into the questions here.
yes,
First one we had it was which price the three soul mint sold. We know how much. So basically, like we minted at 3 soul, resulting in liquidity pool. As you can probably share some numbers in this
yes.
regard.
So yeah, basically, I would suggest we have all the money, indexed into the underlying flash liquidity pool as we have shared our documents, and we have swapped the soul into 15% Bitcoin and 10% Ethereum, and the rest 20% is in Sol, and the rest 55% is in USDC. So this is going to be the flash liquidity pool, which would be the pool 1, which would allow trading for crypto assets on flash trade, and pool 2 would be all USDC, which is yet to be initialized. And the reason we haven't been able to initialize pool 2 is because the markets are closed due to holiday season, and we being crypto natives, we actually forgot that these markets would be taking this 2 weeks long break due to Christmas and New Year's. And yeah, pool 2 is gonna be initialized when the markets goes live. So right now we have crypto pool which trades for 24/7, and like we all degens just trade 24/7 crypto markets. So the boomers need to catch up.
Yeah, absolutely. These guys like to take their time off. Meanwhile, I know everyone is going to be on launch date firing off, 50x leverage or more.
Sure. I would just go through like this questions on the stage. The first question that I saw is, any major things you noticed with people testing on testnet? We actually noticed the pool to be profitable by people actually losing money and getting liquidated. So that is one thing. And Zoeb, you want to add something?
Yeah, for sure. A couple observations on the from the DevNet where people we were afraid of Soul being drained from the pool, and for that reason, like there could have been a lot of hiccups. DevNet Soul is an asset in a lot of ways, not as precious as mainnet Soul, but still. And for that reason, we had to configure the pool in a way which kind of which limited our ability to scale the pool. And it's been cool to notice the trading patterns and how people would like to swap into a particular asset. The problem with DevNets is that they are isolated environments, so you don't have like a Jupyter exchange there to just go out, swap tokens, and trade. So utilization of the pools has been particularly interesting. And yeah, DevNet money is not real money, so appropriating behaviors is not the best thing. But yeah, that gave us insights into increasing allocations on the pool for Sol itself. Sol's been bullish all along, and for that reason, a lot of trading volumes would also be supported in Sol. So adjusting a bit of parameters on how we initialize the pool and a lot of learnings from taken from that are amazing. And then we also got and we've also been pushing Pith to get the same feeds on mainnet. Pith currently does not support as many stocks as we would like to list on mainnet. And yeah, with the holiday season kicking in, this is where what like coin also is tradable on DevNet, but is not on mainnet yet because of price feeds. So we've got a lot of feedback. We've been pushing Pit, showing them the DevNet numbers as well. So it is what has helped us gain a lot of insights on how proficient our liquidation bots are as well. So it all kinds of conjures up. And you guys have just nailed it. A lot of we haven't kind of pushed hard on the narrative of coming and trying it out because of the fear of missing out on potential soul and brickwalling the whole stuff on DevNet. But yeah, you guys have kind of nailed it. And a lot of ETH guys or people from the Ethereum ecosystem who aren't Solana natives, who don't have like wallets even installed, they being able to test it out and kind of getting the feel was the intent. And yeah, like we've got them hooked on. So props to DLN Network and Dbridge and all of these amazing services which kind of onboard users. We are gonna get a lot more attention from Ethereum DeFi folks.
Absolutely. I
Nice.
actually saw a post from LOL DeFi asking like, where do I long ETH on Solana? And it's like, well, you will be too in a few days. You'll be able to in a few days. All
Nice.
right, guys.
Uh,
Yeah. I think one quick, I
uh,
think we mentioned pool two there, and why it's not being initialized, quite like immediately. Um, so pool two is where all the traditional assets are traded at. So this is your Coinbase, your metals, your gold, your S&P, and these markets have trading hours, and they tend to go down during. They're not up during Christmas, during New Year's, and then Sundays surrounding it. It's all very confusing. Well, there's like some markets open at different times. Like so, in general, you can just consider markets are closed, and we are a pool-to-peer trading platform, as we've been saying. And we price the way we get prices, like we price assets for you to trade, are through Oracle feeds. So we actually get price feeds from like real markets. Well, we don't. Pith does, and then Pith sends those to us, and we price them according to that. So if traditional markets are closed, we don't have feeds to kind of base our pricing off of. And so therefore, like this means that pool two is going to have a distinct market, like distinct open and closing hours.
Yeah.
But the pool one with call to crypto, obviously 24 hours.
Yeah. So if you were to compare it to comparables on the market, it's like Jupiter's GLB perps, but a lot of added features to it. One of them is being able to trade synthetic assets which are not natively on chain, which is where forex, commodities, and equities come in. And the problem with these is they have defined market hours, and we operate according to CME. So we have to align ourselves to the operating hours of that market for those particular assets. Crypto assets are tradable 24/7, and to avoid kind of that collision, we need to have distinct pools on it. And yeah, a lot of documentation and a lot of details will be coming our way soon. So yeah, keep an eye out, and yeah, feel free to drop in any questions you have regarding how the structure would be, or any sorts of doubts if you have as a trader
yeah.
concerning the pricing systems and all of that stuff.
Yeah, I just wanted to highlight this point that we have a lot of questions, and I'll be just picking up each of the questions, and like Tregs and Zoe, we can go one on one, one after another, answering these questions, and let's try to keep it really strict
All right.
on the format of answering the questions as well, because I have more than 50 questions on my hand right now. So the
Perfect.
next question is, uh, how does the revenue sharing work for the Beast? Do holders automatically get revenue, or is it only if they provide liquidity?
Yeah, so
First
I'll take
off,
this one.
So
the
Or
the
yes, I hope you got
all
it.
right, go ahead, Rick.
Okay. Yeah, so there are two layers of liquidity here. There will be one where that's the NFT layer. This is where all the mint proceeds, that's what they seeded. And on that layer, all you have to do is just hold your beast. If you hold your beast and then you come to our website, you'll be able to claim the fees generated by that section of liquidity. I believe we're doing it daily, guys, right?
Yes.
Yeah, daily claiming of fees from your NFT.
In
So you don't need
USDC.
to provide in USDC. Yes, not of some random token. So you don't need to provide liquidity in addition to just holding the beast. If you're just here for the yield, that's all you have to do. However, at this point, it's important to keep in mind that mint proceeds worth 3 SOL, and that is all the liquidity that is in the beast. So the premium that we're seeing and floor pricing and all that other stuff, if you are purely here for yield, it might be a better proposition to wait for the LPs to open and then deposit liquidity there. But that said, there's a ton of stuff added on top of the NFTs, and I think it's these things that are causing the premium to kind of be speculated on. And obviously, like not all details
Yeah.
have been released on that. We are we have a very like good design of how we're going to go about it in the future. But obviously, if we receive like good feedback, we're always
Yeah.
going to be we're always going to be trying to make things
All
better.
right.
Sounds
I
good.
mean, TLDR, as a beast holder, you get the fee that according to your share in the whole. So 1 by 5555 is what your share is defined, and every day out of the whole fee collected by the POL, you get one 5,555th share of the whole fee collected for the day, and that goes on for perpetuity, and you earn the fee until we come out with further updates. That being said, you also can provide external liquidity and earn additional yield as a normal LP would do as well.
Nice.
Indeed.
I hope the question has been sufficiently answered. The next question goes for Zohib. Is this the next Binance?
Well, it's the next Nasdaq, not just Binance.
Wow. Love to hear that. And yeah, just going to the chat. Uh oh my god. Okay. At at which price was 3 Sol mint sold that we know how much in dollar terms the POL is added? Let me take this question. Basically, as I said, we've swapped the Sol yesterday, and all the things would be shared once the platform is live with all the transactions and the squad's wallet that we used to swap. And we all did this on open book by placing limit orders, which actually gave us rebates as a maker, by placing maker orders. So all in all, we won more than lost, because we didn't use Jupiter swap to get slipped. We just put maker orders on club and get filled at the best price. So yeah, these things would be shared once the protocol is live, and you would be able to check out, since it's all on blockchain. All transactions would be shared in the Discord channels, and you would be able to verify the POL how it was swapped. And yeah, hopefully that answers this question. And yeah, moving on. uh
Yeah, it is worth noting, like with the price appreciation of Sol, we're really like waiting to the nail the launch date and then move the assets away from Sol. So with the price appreciation of Sol, all the beasts just got a little bit extra pool of
yeah,
liquidity with each one.
that's true.
So pretty
Yeah.
serendipitous there.
Yeah. So the next question is, what are the benefits to holding multiple NFTs?
This was a
Rex, you
fun
wanna go with this?
question. Yeah,
Uh,
would love to answer this one. So this is a fun question. We're not going to release details on this yet, but obviously, if you hold multiple NFTs, you do get multiple features. So you do get to stack your feature at the very least. On top of that, if you just have all your NFTs just sitting in your wallet and then you start using Flash Trade, the VP points or point system will just kind of spread out evenly across all of them. But what you can do, and what we would hope people are doing, because it's better to do it, is you're able to actually boost one NFT by having other NFTs support it. So the way that functionality will work is that you will have your primary NFT that, I don't know, maybe it's your favorite art, maybe it's just the one you really want to level up as fast as possible. That'll be your primary NFT, and then all your other NFTs can be locked and used to support that one, and that would allow that one NFT to level up to twice as fast as a normal NFT. So like multiple NFTs will kind of allow you to level up your NFTs even faster, on top of all like the fee share and all that.
Nice. So basically, holding more NFTs equals to more value. The next question is, any geolocation restrictions for the platform? Zohaib, you want to take this?
Geolocation restrictions do apply because of the standard jurisdiction we operate out of. US users would not be normally allowed to trade because we need to restrict geolocations which fall under the jurisdiction of regulators which do not want people to trade commodities, equities, and forex as well. Um, Provided that the crypto pool is also integrated with the platform, we are not able to offer services to US users by default. Other geolocations, including the UK, which has an FC authority, are also on the block list. You cannot access the platform, and please do not access the platform if you are a US user. And if you know, you know.
Indeed.
All
I'll
right,
ask.
I'm not gonna ask more questions on this, but I hope that has been answered. So about the mainnet thing, it would be at the end of the AMA. I'm gonna keep that under wraps. So just moving on. Uh, okay, interesting. So there's a guy who's on a plane to Atlantic and his Wi-Fi is not working. He's just asking, is the space recorded? Yes, the space is recorded by Panda, who's one of our growth team, and yeah, it's on his head that he will share the recorded AMA. Mm,
I hope you got it right.
yeah, we trust Panda. So there is now an interesting question. I'm sure this would be a bit technical, and I would love Zohib to expand on it. So, how does the stocks and commodities trading work?
Well, short answer is that it's a synthetic perpetual backed by USDC, similar to what you see on Quenta or Gains network as drawing parallels. So Flash, as a whole, combines GMX asset-backed perpetuals with synthetic perpetuals backed by USDC. So if you go to Quenta, if you go to Gains, you have GDI and you have SUSDC, which are wrapped assets representation of a dollar. And for the synthetic pools, keeping them asset backed means we need to have the underlying asset. But since commodities, forex, and equities are not on chain, we need an asset which could either be correlated or be stable, at least not be cross correlated to the asset you're longing. And for that matter, how the way asset backed perpetuals work is we lock up an equivalent amount of value so that you will be able to settle your P&L without having to wait for a counterparty. And for that requirement, we back every synthetic perpetual by an equivalent amount of USDC. So whatever size a position size you're going to take, we're going to lock up an additional value of it. Now that depends on what kind of market you're operating in. But let's say if you're operating in gold as a market, we lock up to 5 times of your position size to allow for price appreciation. And this is a configurable parameter. This will depend on markets and how the market conditions are. You'll have an ADL limit beyond which you would not be able to profit on a long, on the short as well. So you have a defined set of price appreciation and depreciation limits within which all of your positions are backed by USDC. So you get to take a position and settle in the given range at whatever instant you wish for, and the pricing for settlements works from Pith network. Now we have had a lot of issues with Pith as well, as a lot of people may have experienced in Solana DeFi. We use Pithnet as a backup Oracle system. So if Pith fails to update data on Solana mainnet, we go back to Pithnet, fetch the prices from Pithnet, and verify it on chain via signature verification. And there are a lot of technical details on it. But the whole
Yeah,
idea is we take USDC as the underlying asset, we take pricing from Pith, and you get to enter and exit your trades depending on the prices reported by oracles, which are aggregated by the sources of price discovery for all of these virtual assets operating in the market hours from CME.
Nice. Yeah, that was very well put through. And we have the next question, which is also very important for all of us hearing. Second question, yeah, the question is, how is the security audit? What is the, yeah, is this, how is the security audit? Like, just give us a primer on that, Zev.
Security audit. There are two things with the security audit itself. One of the things is that we've been working with Solana Labs on this since February this year. Very first incubated project under Solana Labs with the new initiative. The source implementation, the source code, which is also open source right now, the Solana Labs perpetual reference implementation, that has been audited by Halborn. We are in the process of getting a re-audit done by Halborn, which takes time. And the biggest trouble has been holiday season has kind of extended that to a later point. But our idea with the whole audits was not to just get a stamp of approval saying all of our code is good. We also need to ascertain that economic stability is achieved. For that part, we have run economic audits, running our pricing system through one of the most turbulent times in history. FTX crash, Luna crash, USDC DPEG. We have run our pricing function, got PIT feeds during that time, made sure that the pool stays resilient even during the toughest volatile times in the recent past. So that gives us more confidence than just having the code security audited, is going beyond code security and trying to have economic security as well. We have seen contracts in the past. We have been in this space for so long. We have seen contracts which have been audited get exploited because of economic gaps in the design itself. So we have optimized it beyond just code security to also have the economic viabilities put in, which is also considering UX. Like it's not about optimizing for risk and getting the shittiest UX out there. So it's about finding the right balance, having our audits in those particular orders: code audit, economic audit, and formal verification or fuzzing reviews, and all of that will be released as we proceed with the launch.
Love to hear that. So just wanted to highlight three things of this is like we've been working with labs on the perpetuals implementation and the base protocol is audited. We have added some interesting features of it, which are in the process of getting audited right now. And apart from that, we've also done economic audit. So just a small TLDR. So yeah, next question is, what's the pool two? What does it have to do with traditional finance hours? Tregs, you want to go with it?
I think we just did actually.
Uh,
Essentially, like our pricing, the way we price things through oracles, and as such, if the normal markets are not trading, we don't know what the price of the assets are, and so therefore, on pool two, trades will only happen during open market hours.
Um, Let me add a bit of color on it as well. That is, pool one, you can enter and exit the pool at any given instant as an LP. But with pool two, when the markets are closed, the forex markets are closed for the weekend, equities markets closed overnight in the Eastern time zone. The biggest trouble when you with these markets would be if when LPs enter and exit a pool, we need to compute the pool's equity, and there could be positions which are left open when the markets is closed. So during gap ups or gap downs, when markets reopen, we need to assess that we are not allowing LPs to game entries and exits to the pool. For that reason, we only operate when the all the underlying markets have an overlap of operational hours. Users or LPs depositing into the pool would be clearly notified of the epochs of when markets open and close, having this overlap on all of the underlying markets combined. And all of the technical details will be shared and assessed. The LP holders or beast holders will have nothing to worry about the collection of fees or how the liquidity is handled. All of that is abstracted away by having a meta layer above all the pools. So we have been working on composability ourselves, which we have optimized for. So the platform, or you wouldn't even know as a trader, you wouldn't even care what pool you're at or whatever it is. The only thing that pool two would differ from is it would have defined epochs to enter and exit on markets operational hours. And yes, like our UX, rest assured the UX would take care of all of it. without having to understand all of the complexities involved. It will be there for anyone who would love to dive deeper. But for the UX part, it's going to be as simple as allowing you to enter and exit in a defined intervals of time.
Right. All right. The next question is, did you have to work with any financial regulators? Let me take this one. We basically are a trading platform and we need a license, and we have the license under a Panamanian entity to operate an exchange, and that should cover. And we do have advisory board and lawyers who help us figure out the things in respect to the terms and conditions and the geo-blocking thing that you have been asking. So we are pretty much covered on that side, and we have actually worked for 3 months on getting all the rules right so that we don't end up in jail like Arthur or
Yes.
so.
And the another thing
The
to add
random shots
there
firing,
that we are
dude.
not a broker. We are not a broker dealer for crypto for forex, commodities, or equities. Neither are we a custodian for crypto assets. The protocol is completely permissionless, which kind of abstracts away a lot of regulations involved. We always had this route that Cube Exchange or Mad Labs Backpack Exchange go, which is being fully KYC'd. But in the interests of decentralization and kind of pushing for DeFi, we have maintained the permissionlessness and avoiding falling into a category where we are required to do strict KYC for now. The idea is to have the platform um, put out in a way which remains permissionless for perpetuity. And while doing that, also take care of required security needs. And yes, that's the vision we start off with. And Toli's vision of someday replacing Nasdaq. This is where it all begins.
Nice, nice. Yeah. The vision is to have an on-chain Nasdaq engine. And yeah, the next question is this is a very interesting one. And what's the difference between Flash's pool-to-peer pool versus Jupyter's pool, Zoheb?
Uh, well, two particular observations, if you've used Jupyter, would be one, it does not support virtual assets. Well, it does not support virtual assets yet, and that's the biggest demarcation difference that we have with Jupyter's perpetuals. The other is Jupyter is primarily focused at GMX V1 kind of markets. We can support GMX V1, V2, Gains, and Quenta, all of these exchanges combined, which kind of brings in a lot more variety on the assets we are able to list, and also kind of more granular control over how the assets are being utilized and distributed. Apart from this, the biggest difference that we have is the extensions on the platform itself. The NFT structure which is associated, and beyond that, the biggest differentiator for now would be the fees that you're able to accrue. Jupyter's fee is compounded within the protocol. We distribute the fee in real yield. So Jupyter's fee is kind of is diluted within the pool itself. It's I don't know if diluted or compounded is the right word, but however you take it, if you're an LP on Flash, you will be able to collect your fees every single day, just as you would do on GMX. So you are able to collect fee into a different token, which transforms it into a yield-bearing liquidity position instead of being a traditional liquidity position, which appreciates in value and rebalances in the amount itself. So that's the observable difference that you have, apart from all of the extensions, NFT-based association of the platform that you would experience.
All right, all right. So the questions are stacking up really fast, so we kind of have to go a bit
I do want
faster
to
on
address,
these, or we
yeah, I
might.
want to address one quick one because I think people are getting a little ahead of themselves, and it's important to
All right.
keep your expectations reasonable. And that's the rev share for the NFTs. So we'll just go to over here to this quick slide. So the NFTs have a liquidity layer, and that liquidity layer I think is like probably like 1.1, 1.2 million right now from all the mint proceeds and after all the rebalancing. And but and like people are saying like, oh well, Drift, Jupiter, all these other guys are doing 30 million of volume every day or whatever, and so we extrapolate that, and that means NFTs are going to get $20 a day in rev share. So while if we did all that volume on just that $1.2 million of liquidity, that would be accurate. But we expect, but obviously, like we have the LP open to other liquidity providers, and if they see that $1.2 million is on aggregate generating, what's that, like 100K a day? Am I doing the math on that right? Yeah, it's 100K a day. So if you're
Yes.
making something like 10, 11% yields every day, more liquidity is gonna pile into the liquidity pool, other than just the NFT. So that will, in some fashion, dilute the yield. That said, we expect like this to be an equilibrium that needs to be reached, where the more trading that happens, the more yield for the liquidity providers. And if there's more yield for liquidity providers, they're going to come in and kind of start to dilute that yield. But that would allow for even more trading to happen, because that means that, yeah, King's got it right here. That means that they have more open interests to kind of take up, or they can also fit in more size. So you're really going to reach an equilibrium point, and it'll probably be like equivalent to some sort of rate that is like the risk premium of like our pool versus like all the other ones.
Yeah. I mean, how I put it is that all of our positions are asset backed, so we need more assets to back more positions and grow the overall open interest. So more than your yields getting diluted, it's about your yields growing in value than being than considering it as a pool share. If you look at GMX's volumes, they're kind of they do more than 100 mil a day, and if we scale that to Binance, and if we scale that to traditional markets, the number goes up quite high. So when you have those exponential numbers to reach, getting that additional liquidity and growing the overall trading volumes is what we are optimizing the most for. Beast holders, but by virtue of being the bootstrap liquidity of the protocol, earns the most amount of fee in the entire history of the platform as we progress. And that being said, Beast holders also earn 100% fee for the POL, and other LPs that come in would have a substantial discount, which stands right now at 30% less than the total fee earned.
Got it. Nice. Yeah, heading on to the next question is a lot of like NFT holders, given we are talking about utility and revenues, they are like in a competition to understand how best they can, level up their NFTs. So the next question is, what's the other ways to level up your NFTs if NFT holders are not able to level up by referring? Tregs?
So is it time to reveal the game?
Sure, man.
Let's do it. All right, for the first time
Well,
ever, we have our voltage point tables, as well as how you will actually be earning these voltage points. So here here are all the benefits. The rebate percentage, that's the percentage you'll get for like if you refer someone to the platform, and you're a level 1, you'll get 5% of all their fees. But if you're level 4, you get 12.5%. If you're level 6, 17.5%. So you can see how the NFTs kind of will, like a level 6 NFT, if you're an influencer, that's going to be so valuable to you. And I've heard the feedback like, oh well, I'm not an influencer. Like, why would I bother leveling up? Like, yes, it may not be valuable to you, but an influencer who's like just like, okay, how do I make more money? Is going to look at these NFTs and be like, oh, if I just get a level 6, I'm going to make so much more in fee share through referrals. And so it's going to kind of create that value. I know we've been getting questions on like, will rarity matters? I think we'll just rarity as far as traits and all this
Uh,
are not going to really
me
affect the
let,
game
let, let me take
aspect of it.
a question.
But
No, no, no.
okay, sure.
The rarity, the rarity thing is pretty interesting for me because I would, like just ask any of the guys who's asking about the rarities, like, why does a Mad Lad skull have a premium? Like, being it a skull, does that give you something, some utility out of it? Does it? If it does, then Beast will also have something. So yeah, that's the only
Yeah,
answer that I have to give.
the rare ones do look very cool, especially at the later stages. So I do, and I have a feeling, especially those who like want to power level some NFTs, they're gonna do it on a rare one, right? Like if you're just gonna try to level up one really fast, I would go for a rare one personally. I've sniped a couple here and there, So we're just gonna leave it at
Yeah.
that, and I think that'll be priced in, however it's priced in. But
Yeah, well, let's just leave it to the markets to price in, to be honest.
yeah,
Also, talking about the ways to level up, basically, you would be able to level up your beast by trading on the platform, by
yeah,
providing liquidity to the platform. The best way is like you LP, you earn revenue out of it, and also get VP points. So that's an interesting angle. And by trading, if you're a good trader, get onto Flash Trade, earn money, and you also earn VP points. So we have made sure that there are a lot of ways to earn voltage points, and that will help you to level up your beast faster, which unlocks higher fee discounts and higher fee rebates. And eventually, we've been talking about the thing. So yeah, that will also be there. Like the higher the beast, the more value it actually unlocks for everyone. So, and there is boost mechanism as well. So yeah, uh, um,
yeah,
I'd flip the question and say, if you go to Tensor or any marketplace and look at the attributes, and if you're looking at Reddity on the static attributes, you're in for a surprise. There are a lot of dynamic attributes as well, which you would unlock as you level up. So Reddity, keep guessing. And as you level up, then yeah, if you're the first one, and if you're reaching level 6, your NFT is gonna be super rare by itself.
nice. All right.
yeah,
I'm just saying these questions are stacking up, so let's try to go over it very fast. So the next question is: does Flash gonna have a token? Yes, Flash is gonna have a token, but we won't be revealing all the details about it because there is a lot of things to be done and brainstorm that should help everyone to be on the same page. So we wouldn't like to share details right now, so that it's done in haste and you just ask us, oh, you told us this and you change your things later on. So that is something we don't want to talk about in detail. Okay, the next.
Flash is all about community, right? Flash is about holders as well. So you tell us what we'd love to that FAF token, and yeah, we're happy to take all feedback and make the protocol token ready before launching a token.
Nice. So there is an interesting question that I found is, can you explain why trading on Flash would be better than other perpetuals on Solana besides it being asset backed?
yes, I would love to take this one.
Sure.
So one thing to keep in mind is that a lot of the team actually are traders themselves, and honestly, we build products that we ourselves would use. And Flash is one of those products. Right now, if you try to trade any reasonable size on Solana, you really have to be quite careful. It's quite easy to slip way more than you have to. You kind of have to look at all the liquidity available on the trading venues. You have to you have to look at how much you might slip. Then you have to manage collateral across all the different DeFi exchanges if you're trying to trade with size and do it well. We really wanted to have a place where we could just, all right, 20K, 5x leverage, fire it off, and not really have to worry about all this intricacy and like sizing your trades and like T-whopping across 5 minutes, because if you do it in 5 seconds, you'll slip way too much. All those things, right? So it'll be the user experience. The user experience is kind of what we've optimized. That's why we've spent so much time optimizing and making everything as fast as possible. I think so. If we also have a little bit, like do believe that any delays are like most of the delay that happen in any interactions are purely that a block needs to be confirmed with Solana. So that's that's 400
Uh,
milliseconds, and then anything additional to that is like very very
yeah.
very small.
Let's yeah, let's try to keep the questions bit to the point. I apologize for to breaking you guys on the flow, but I know
No
we would
worries.
love to share more. But we have a lot of questions on our hand, and let's try to get over it. So I'm just gonna skip the questions that are repeated, and I'm sorry, guys, because there's huge flow here. Because there is this I think people are a bit confused about flash beast. So basically flash beasts are a point system, but they are how do I put it, they are visualized point system. It's not just numbers on dashboard. Like the team has actually built a system that calculates everything on chain in the metadata of PNFTs. And instead of having this huge influx of X amount of points that you gain on other DeFi protocols where you don't know, you will obviously get diluted by whales Flash bees actually give you the best pictorial representation of where you stand regarding to the VP points that you've held, like earned, and the levels would actually, just show up that you're at this level, and this would unlock this amount of, revenue
Yeah.
utility from the protocol.
Yeah, let me rephrase that in the simplest term, which is visualizing gamification in DeFi as a first, and then also extending on to having non-fungible points. Your points at level one are different to level your points at level two, which kind of defines as you gain. There's an exponential function of points that you earn as a power user, which is what is not defined. Right, points are abstract. We made it very clear on how the points would be as you see on your screen, while also having 5555 tokens for flash trade instead of a single token right now. So yeah,
It's
two, two,
VP
two things in
points.
one.
Yeah. So the next question is, I'm sure people are trying to speculate on this, and yeah, Trex can take this one. Do you have any estimate for daily fees in terms of dollars that each beast would make?
Oh my gosh. So I would have to think about. I would urge people to think about it as yield percentage, and the yield percentage will be realized on the essentially nav of every beast. I think that nav is going to end up being somewhere around 220 or 230 per beast. We'll release the exact numbers once we have all the pools initialized and all that. And so it's like on that $220, $230 worth of nav underneath the native asset value. And then on that, like let's say the whole LP as a whole is earning something like 50-60% yields annualized. And so that's kind of what will be your fee share. It'll be on that like 50-60% on that NAV value. I know some people have kind of speculated like, oh, but the floor price is so high, so like it should be on that. And it's like, well, the team never actually realized an increase in floor price. It's not like the floor price goes up and we just magically 2x'd all the assets in the pool. So it's based on that initial value. Uh, if you, again, I want to emphasize like there are different ways to play the flash trade game. One is through the NFTs, leveling them up and sort of doing that. If that's valuable to you because you're a trader, or you want to dump on an influencer, as I see some people are saying in the chat, fantastic, do that. If you're just purely interested in yield, then great, you can do that as well, and simply participate as just as an LP.
Interesting, interesting. The next question is, how many beasts are needed to boost? What's the details on it? I would suggest to kind of wait on it, because we will share the details when the feature is live, and we would have all the details in our documentation on that. I am just skipping over it because we have a lot of questions, and I would love to go through those before, you know. Okay, we have one fun question. Would you get a girl on Tinder if you have a Flash Beast PFP? Trex, did you try this?
Yes, I have. It's worked wonderfully. I have about 3 dates lined up after Mainnet launch, so I'm looking forward to it.
All right, all right. Anyone has TLDR on
Well, I
points?
think that only happened because you had a bull. I have a bear, and I failed.
Yeah, with bears, I think they're more popular in the grinder community. So
Fudge.
sorry. So okay, we're getting a little off topic now. Let's bring it back.
Okay, no worries. Yeah, let's bring it back. Let's bring it back. Okay, so the TLDR on points is right. What Tregs have shared on the screen. You can screen grab that and have your thoughts run over. And yeah. So the next question is, you mentioned that you've learned the scoring on Solana by reading through Mango code, but what measures have you taken in security terms where there are any things that were concerning? Zoheb. So the question is, since you guys have
Num
learned by looking on Mango's code,
Yeah, yeah,
do you have
yeah,
any
yeah.
additional security
No,
things
no, not
covered?
just code. I got that. Yeah, I get that, and this is something that's been very valuable through our journey as well. We started off as builders of composability on Solana, very first protocol to move an EVM stack with a token back at the day with Investin, with Joe has been a journey, quite a journey. And as I've put out a tweet as well, we got off our composability high horse after facing consequences with our untrading protocols. Mango's code, as we have put out a lot of times, worked as it should. And yeah, I mean, at the end, a highly profitable trading strategy could go out of scope on the code audits and how the code would function. Because what we keep forgetting is it was a breach on FTX's end as well to miss liquidations and kind of go haywire on the markets. That is the reason we spent most of our time analyzing our pricing functions. The whole understanding behind pricing with oracles is that centralized exchanges are the proper source of price discovery. We see multiple instances of LSTs getting depegged. We have had instances of USDC itself being depegged. We have seen Luna go the way it did in the past. So, having learned from those instances, we have made a pricing function which is able to compute volatility on chain without ever having to kind of gulp in all the data from centralized exchanges. That is by using a custom pricing function which takes spot and EMA prices posted by Pit every slot with the lowest latency possible. We compute the implied volatility from this data aggregated by Pit, and we price our feeds in a way which is able to create an artificial spread by looking at volatility. So our pricing, because it relies on EMA, it might feel bad for users, which is why we have a custom pricing function which only kicks in when implied volatility exceeds a given threshold. And this system is what kind of makes us confident on pricing on-chain assets from an off-chain oracle, which is aggregating prices from centralized exchanges and even TradFi markets by aggregating all different publishers. So this system, coupled with asset-backed primitives, as we have seen, builds confidence in us offering up to 100x leverage without implying risk to liquidity providers and offering the best possible fills to traders. So it's a best balancing act, and GMX have been running through all of the time. They started off on Arbitrum and were able to get all of that traction. So asset-backed primitives, which are proven by GMX, and synthetic perpetuals, which have been gaining traction with Gains and Quinta, that is the system that we bring onto Solana and extend upon it using our pricing function, which can take care of economic risk vectors. So that's the TLDR on how risk
Interesting.
management and providing
Yeah.
the best UX goes hand in hand.
Yes, just adding some numbers over it. So basically, the forex market does around $7 trillion in volume every day, and right now our idea is to at least get 1% of it. And if we are able to get 1% of that $7 trillion in volume, Flash would be making enough money that is more than whatever Binance and Coinbase makes every day. So just adding something there. So yeah, the next question is any VC funding? So basically, the project is all bootstrapped. We have been putting our own monies into the project because we believe the project is really valuable, and we've been working on this project for the last 10 months or so, and it's all bootstrapped. Everything has been built from scratch. The branding, the system, and the ideas, everything is a novel function that we all have brainstormed for the past 10 months and have eaten each other's brains out. So it's been a journey, and we've learned a lot through that journey. So yeah, moving on to the next question is, what kind of fees is Jupiter making right now to understand Flash's, capability of earning fees? So let me take this question as well. Jupiter right now is doing more than $100 million per volume daily. So they're actually making something around $150,000 per week, if I'm not wrong. Zohib and Trex, if you can correct me on that. 150 for the LPs, or
That's right. And
yeah.
yeah, I mean, I refrained from giving a number earlier when asked as well. What would Flash earn? That's just because it's a function of market trades as well. How much of a trading happens, and the biggest problem with looking at fees in terms of GLPs on pool is that it's compounded within the pool, which means fees is also impacted by P&L. So if people, if traders settle in a positive P&L, that means the pool has taken a loss, being the counterparty. And due to those risk assessment, there has to be two separate, distinct APRs, which is like pool's own underlying assets and then the fee that's earned. Flash differentiates that by taking away the fee and having that distributed distinctively, which allows people to kind of get the absolute transparent APR. And with that said, yes, the number of 150K is ideal. I've only looked at it in the first week of GLP going live, and it was 10,000 for the first week, and then it's grown exponentially post that.
Yes, love to hear that. And this is an interesting question, and it's kind of repeat, but it's an question that we should be answering a lot of times because a lot of people will be having this in their brain. So the question is, what specific strategies and technical measures have you implemented to mitigate the risk of price manipulation, especially if you are talking in the context of zero price impact and minimal spread, as seen on GMX with the exploit of 500K dollars during the USDC DPEG?
All right, let me get that done. So we're getting super technical. We're saying we're short on time, but yeah, I mean, questions like these are important to address and take your own time. So the very first thing that we have done is we take EMA and spot both prices posted by PIT. So because EMA is a lagging indicator, we can assess how much the asset price have moved, which is an indicator of implied volatility. By gauging the implied volatility of a particular asset, a DPEG would mean we would ideally assume USDC to be $1. And for stable coins, we check the deviation of the spot in EMA both from the benchmark of one US dollars. And by when the market kicks in and when we see a DPEG, the pool always trades the assets in a way where it buys the asset at the DPEG price, but always sells it at $1. For equity calculations, we always take the lowest price. So LPs are getting priced according to the real value of the pool. So LPs don't lose any part of the USDC, which is underlying, with assuming that USDC would regain DPEG. And if the asset goes on to not gain gain back its peg, it's going to be valued at the current value reported by the implied volatility. So when you have an LST, a UST kind of a situation, all of the prices. So EMA reported over a longer time frame would also reflect a downwards trend. And when that kicks in, our custom pricing function it kind of understands that this has happened by virtue of both spot and EMA going further away from the benchmark of $1. And by this, we ascertain that the stable coin, which is supposed to be stable, has now lost its DPEG, and control kicks in, prices it at the lowest possible value. But if it's a USDC kind of a situation where we have the repeg reconstrained, all of your positions are priced according to the instantaneous price of that particular asset. So LPs and traders both have a trade-off when such situations arise, and our pricing function is optimized to prevent losses to the pool as a first.
Nice. I hope that
A lot of
has
this stuff
cleared
will
the.
be on the documentation. So if you're more of a visual person like me and kind of need to read two sentences, wait a minute to fully understand those two sentences before moving on, will be really that'll be in the documentation.
Interesting, interesting. So
Yeah, and
I
then the code
also,
as well. The code's open source, and yeah, you
yeah,
can actually view that once we release everything.
love to hear that.
Nothing
So
like going through some Rust code to understand a protocol.
so I'm seeing this
Very
question a lot
relatable.
where people,
Sorry.
yeah, where people want to, speculate on the floor price of each Flash Beast NFT, and they are thinking that it would generate $18 per day if we were to do $100 million of volume per day. I just wanted to say that Flash Beast are not just equivalent to what the revenue that they're generating. They also give you the huge fee discounts, which are industry leading discounts, and these fee discounts would be only available on Flash, and these would just compare to the VIP levels that you see on Binance. And the next thing is every flash beast is actually backed by certain amount of liquidity in the index pool. So as the price of index fluctuates, the price of underlying liquidity also increases and decreases. So you cannot say that the floor price is just 3 sol. Imagine if Bitcoin hits 100K and Ethereum goes to 5,000 or $10,000, or Solana goes to 1,200. The backed value would actually increase, and so the price of beast is not just equivalent to 3 sol. And the third thing is since it's a revenue generating beast, the revenues are going to fluctuate. You cannot pinpoint it by saying, okay, it's just going to be at this price. So there would be a week where it generates a very high fees. There would be a week that it's just moderate fees. So it's very dynamic. And the fourth and important thing that I just want to highlight is, since this comes under my you know part of work, is each beast depending on their level is going to get some token allocation when we have the token eventually. But I don't want to share the design because we are still working on it, and it's going to be an interesting design, and we would love to have ideas being shared by people who want to get aligned with Flash, and we'll work with you guys to have interesting token models on launching the token when we are ready. So yeah, hopefully that should cover the questions regarding the price of the Flash beast. Hmm.
Indeed. I think
Indeed.
we're at the hour or so.
Oh
So
my
is it time
God.
for time to
I'm
release
just
the
going.
answer the question we've been asked 50 times through all avenues everywhere? We'll be in the chats afterwards to get more questions. Sort of. Well,
Sure, man. Yeah, oh my God. Okay. These questions are, yeah, the questions are huge. So
there are
yeah,
some good ones, but we'll be around, guys. Don't worry. But now,
don't worry.
without further
Sure, Trex.
ado, when launch date? Let's just flip the slide. All right, boys. Have a nice Christmas present for you
Merry
guys here.
Christmas.
We will be launching Mainnet Live on this Christmas, 12/25. So get ready, get hyped. Should be a very fun one. Christmas is also pretty
I
special on Solana. Last year we had the bonk airdrop. We had Vitalik a couple days later, kind of really supporting the dev community and everything we were trying to do. So this time of year is really special, and it feels amazing. It just feels amazing to me personally to be able to launch on this date. I'm sure to the co-founders here, how incredible it must be.
Absolutely, and couldn't have been more excited for Christmas this year, and yeah, everything being put in place. Yeah, this is what we've been waiting for. So that's the date for you all. Let's rock.
Let's
One
rock,
last thing
guys.
that happened in 25th, DGods left last Christmas as well, and well, I don't know. I don't know how happy they are about that decision.
No one knows, man.
Good riddance.
Yeah, I think, since we have the platform to ship and a lot of things in our hands, we would love to take these questions offline and, answer each of them one by one in the chat by replying to them. And if there is any interesting questions that really, matter to you guys, please go ahead and open a ticket, and we'll try to answer those questions in the ticket as well. So hopefully you guys, know how it was worth it for the AMA. And yeah, just going through the questions if I find something interesting. But till then, Trex, you want to add something? You just hopped on from a space with FOMO. How was that?
FOMO was interesting. We love our NFT brethren and the community and the kind of vibes that they bring. And I know we have some people here, and we're so happy you're here. But we are a DeFi platform first and foremost, and so we're happy to teach anyone. I know there are some people sitting like I've read some comments in the chat being like, "Dude, I understand half of what they're saying," or like to asking us to speak English because we go into some pretty technical things, but that's the thing with like a next generation Dex, right? If you're trying to offer the absolute best user experience while protecting LPs, we're gonna get deep into the weeds, and happy to dive in. But obviously, you need to understand like fundamental levels initially, and then kind of build your understanding from there. DeFi has been around for 3-4 years, and all of us have been around since that time, trying out all the products, building some things. And so this is the
Yeah.
culmination of like 3-4 years of DeFi design, and this is the latest and greatest, I would say.
Yeah. I would love to have some questions that were, bit on our mental health or, physical shape, but I didn't find any of those questions. I'm
They,
sad.
they, they don't care, man. They don't care. I got
Oh
my
my God.
first consecutive 6 hours of sleep recently, for the first time in a couple of weeks. So real hype about that. I imagine,
Congratulations, mate.
yeah. I hope you guys are able to experience that soon. It's pretty great. But yeah,
I don't
thanks
even
so much
know
for everyone.
Amen.
when I'm sleeping or when I'm sleeping.
Yes. We will be
But
doing some notes. There will be a recording of the space, guys. So
All right.
yep.
All right, guys. I've got a call to catch up as well. I'll take a leave. And yeah, this was amazing catching up with all of you.
yeah, thanks so much for coming.
Thanks.
Yeah, we'll have more fun with the names next time.
Have a good
See you,
one,
everyone.
guys. Bye.